MK Surana joins us now. Mr. Surana, let's understand oil. What is the oil market telling us?
I was just hearing one now, and first thing, the levers have shifted from the supply side to demand side. So all the tariff bombs which are floating around. So the biggest fear is the recession and the demand side getting subsequently diminished, and so the levers have shifted. And added to that is OPEC increasing its supply. I think that was a bit surprising, but likely because they have postponed it already three times in the past to roll back some of the supplies, voluntary cuts which they have made earlier, and to roll back. And there was, of course, the internal dynamics in the OPEC where some of the countries were producing more, and there was a dissatisfaction among some other people. Also, I think there was a feeling that if the Trump focus is on more drill, then whether OPEC didn't want probably to give the volumes to the competitive suppliers and take that volumes in their fold. And also the countries have to balance their budgets. So overall, there is an additional supply announced, which is almost three times what was expected, from 138,000 barrels per day to 411,000 barrels per day, which was supposed to be somewhere around July. Now it is happening in April. So that is one thing. So supply side is definitely looking very positive for the buyers. So the crude is heading downwards and is likely to be lower. So I think the base has shifted to somewhere around 65 to 70 compared to what 75 to 80 was there. And we need to see how it goes further. Of course, it will depend on all the noises are made. But to me also appears that this whole gamut of trade war which is going, at some point of time, it will get to some semblance. And at that time, we'll see what is the base which is getting established.
Now, this is not COVID, right? That world will shut down, demand will shut down. This is realignment of demand and supply. Where does India stand here, according to you, in the oil diplomacy, if tariffs come into play?
So what you say is correct. Earlier, that was the case, that the oil prices were guided by demand and supply, subject to some of the levers which OPEC has. In the recent past, or let's say last few years, these are also being guided by some extraneous factors. Let's say the voluntary cuts, let's say the tariffs, let's say the secondary tariffs, the geodynamics, the Russia-Ukraine war, etc. And this had started affecting the crude prices. Otherwise, it was being managed by supply demand, subject to cyclicals, because always when the margins are good, the people start investing, and because it comes in packets. So after some time, you have got overcapacity, and then margin start reducing, and again this comes. Now, the country like India, we will always like that the commodities like crude, which we are 85% importer, remains low. So it suits the country like India as far as the oil is concerned. But whether the overall recession helps India, I don't think so, because if our desire is to become number three economy, and we will have the component where the consumption should be there. So I think a reasonable base for oil is required along with the consumptions. So that should be the case. And the lower oil price, as I had mentioned earlier also, the refiners will have a lower fuel and loss cost. So to that extent, refinery margins may be better to that extent.
All right. Good morning, Mr. Surana. This is Shrishti also joining in. But also give us some sense on what could be next in store for the OMCs, because they are definitely in the sweet spot. With the crude oil prices coming down, their margins are expected to do better. But there's a bit of uncertainty that the government play can be there for the OMCs, whether it could be a rise in the taxes, whether it could be a price cut. So do you believe that there is a possibility for any of those two happens?
There will be a cry for reducing the prices when the crude prices comes down, while the margins on the petrol and diesels may be good, but still we have got a overhang of LPG under recoveries. And I think the OMC will be required to see on totality how their bottom lines stake out. But in the time to come, there will be a demand from the consumer side and from the other stakeholders to reduce the prices. And I think OMC will be required to look at it a bit cautiously, depending on how the LPG under recoveries work out for them.
All right, and along with that, Mr. Surana, what we are seeing is that the dependence of oil for the Indian markets is coming lower on a year-on-year basis as well, because as a percentage of GDP, if we see, then that ratio is trending lower. Do you believe that the trend is here to stay, and on an overall basis, this number will come down more?
No, actual oil consumption per se had not reduced on the real number basis. Maybe the GDP component for the other items other than oil has increased, bringing down the percentages. But if you see the MS demand or HSD or LPG or ATF, the FY25 was more than FY24. I think MS demand was 7.3% higher, or diesel was 2% higher, LPG was 5.3% higher, ATF was 8.9% higher. So overall, oil consumption have not reduced. As a percentage of GDP, it might have reduced because the other component has gone up as the economy is growing.
All right, but just taking that point forward, Mr. Surana, how the OMCs are likely to play this fall in the crude oil prices. If you can help us understand that with every single dollar fall in the Brent crude prices, what we see in the international market, how much is the benefit likely for the OMCs back home? If you can help us understand that from now, what will be the strategy and what sort of improvement in the numbers is likely?
So there's not a straight question to that extent, because the cracks on individual products depend not only on the crude prices, but also on the relative demand supply of individual products. So right now, the HSD cracks are higher than the MS cracks, and because the Indian refineries are diesel dominated, to that extent, it helps. But at the same time, the demand of diesel is growing at a lesser pace, around 2% or 3% compared to petrol. So that is one aspect of it. The second part is the exchange rate component, which also has got an equal impact on the domestic prices, because they are determined taking into factor that also. So there is a correlation without any doubt that what every dollar will do. But it is also not a straight question, because our market price is not straight driven by what is the crude price is doing. It is a component of many things, and it has been constant for some time. For example, as I mentioned earlier, the LPGs, there was under recovery for quite some time, even though the MS-HSD margins were positive. So if the OMCs have to look at their bottom line, they need to factor in all these components, which include the refinery margins, which includes the individual product margins. And because of the constant pricing in the market for some time, the over recoveries and under recoveries on individual products, and the exchange rate, how it moves.
Right. Okay, Mr. Surana, pleasure having you on the show today. Thank you so much for your time.
If you like this video, then like, share and subscribe to ET Now.